Man, it's been a little crazy couple days for AMC. So first and foremost, I want to say thank you for taking your time to check out this video. I truly appreciate it. I am not a financial advisor, and this is not financial advice. I'm just a guy taking a look at a chart, telling you what I see and what I think about it. So I've pulled up AMC's chart tonight, and with a couple indicators, this yellow line is your 200-day moving average. This white line is your 15-day moving average. Generally speaking, when this line is above the yellow line, you're in bullish territory, and when the white line is below the yellow line, you're in bearish territory. So what has happened since Wednesday afternoon is what we're all asking ourselves. And I think it's a very clear case of market manipulation. Wednesday about 3 o'clock, AMC went on this massive tear, went through the closing bell, all through the after hours, hitting a high of about 1189 before, settling down for the night. Then once the pre-market opened, we see consolidation, drop, a little bit of consolidation, build up momentum. And all this right here, that's normal to me. Like, this is all stuff that we see all the time in it. Even this drop right here, right at the opening bell, we've seen that for a month now. Then we consolidate for the entire morning, and then about 1:30 in the afternoon, the bottom just falls out. We find ourselves falling hard in this downward trend. This looks to me like a massive short ladder attack, and it was bad. I mean, we lost $4 in a matter of 8 hours. So it took us all the way back down to where we started. Now, the reason I feel like this is a short ladder attack is we've all identified short ladder attacks happening to us all this month. Now you go back to the 10th right here. You see we started out at about 554, went up to 659. Then at 125, we got short laddered attacked all the way back down to where we started. You go to the 18th. We have our run up in the pre-market, which is normal, just like it was over there for this morning. And then we dropped right at the opening bell like usual. Then we start off about 572 and we run up to 579, or not 572, excuse me, 566, and then run up to 591, and then get short laddered attack starting about 135, bringing us down to where we started. So what was different about the last 2 weeks compared to this week is that from those weeks, we all saw people asking, is this the squeeze? When's the squeeze going to happen? Is it today? It needs to be today. But this week, we knew what needed to be done. We knew that we needed to be above a certain price point for these calls to happen. Now, right here, when you take a look, I feel like this is all from the 22nd on is organic growth. Buying on the dips, pushing the price point up higher. Then at 3 o'clock with no news, no catalyst, nothing that I could find. Now, if you found something, drop it in the comments. I want to take a look at it, see what it says. But it does this $4 run, and then they take it from us at 1 o'clock, the usual starting time that they like. But, not all hope is lost. So whenever you look at the previous days before this, I see a solid point of resistance around 730. We spent a lot of time above it on the 23rd, the entire aftermarket time, and then we've stayed above it since then. Now what we're looking for is this to bounce off that resistance. We're already going to start the day off with one green candle there, but it's going into pre-market, and stuff's just weird during that time. We all know that. Anyways, so we're starting off a curve right here. I honestly think it's just the same thing as right here. I think it's going to curve up a little bit and it's going to fall until we meet this resistance. Then I think we're going to bounce up from there. Now we want this line to be pushed over the 200-day moving average, get us back into bullish territory, and when it does, it'll be at about $8, which is great news, because we all know that supposedly there are 27 million shares that were failed to deliver, and they're not accounted for. They've got to deliver those at some point. And in addition to those 27 million shares, we are looking for these call options. They're going to expire in the money. Now, everybody's saying you got to be above $8, which $8, there's 61,000 contracts out there, so we want to be above $8. But we need to be a little bit higher than $8 because if you exercise your call right at that price point, you actually lose money due to the premium. So we need to push it where it's going to be beneficial for you to exercise your call. But that's okay because that's also in line with right around where we'll pass up our $200 200-day moving average. So I added up these call options here, and we're sitting at about 158,000 contracts, which each contract is 100 shares. So you're looking at 15 million shares that will have to be delivered starting Monday. These will be on top of the 27 million that are still out there that haven't been delivered, supposedly. Now, I'm no expert, so I don't know if that's 100% accurate, but it's what I've read in a few different places. So I think it's pretty true. Putting a lot of trust into it. If we can get past the $10, push somewhere into the $11 to make the $10 worth it for them, because the premiums have gone up. Now you're talking about 23 million shares that are going to be added on to the 27 million that are going to have to be delivered on Monday. So this is all on the heels of what Fintel is reporting us. Now Fintel is telling us now there's only 60,000 short shares that are available for lending in the lending programs. I don't know if that's 100% accurate. There's been some discrepancy on what they've reported compared to other places that information is pulled from. But they're saying 60,000. I saw earlier today where this was at, 400 shares, and then it's been in the millions, a couple days before that. So 60,000 to me is an awesome start. It's a drop in a bucket. That's nothing. This part I'm really excited about. Now, if you've been following this for about a month, we've seen this actually triple in the last week. So now it's a 6.2 or 6.02% short borrow fee rate, which is an annual interest that they have to pay. It's not daily, but it's tripled. So now it's 3 times as painful for them. So price point. This is what everybody asks in every video that I check out. And nobody wants to touch price point with the 10-foot pole, and I don't blame them because anybody tells you a price point is lying to you. Nobody knows where this is going to go. Now, I've done some research into short sales and stuff like that, and what I've learned from my research is that there are no rules. It's going to do what it does, and we're along for the ride. So people are talking, 100 hold, 200 hold, 500 hold. You do you take your profits when you need to take your profits. If you can hold because you only invested money that you're able to lose, then hold till the end of time. You do what's best for yourself and your family. This person on Reddit is making a case for $2,000. Now, could it happen? Yeah, it could happen. Everybody compares this to the Volkswagen squeeze, where Volkswagen went up to 1,000 euros. But it's not really the same thing. That was a very strategic play by 2 entities to take on Volkswagen. We all know the story. We've heard it 1,000 times by now. But from what I did find in my research was when Gateway was squeezed, it went up 20,000%. That would be about $2,000 for AMC. So, it's been done before. There's precedence for it. So, yeah. I think 2,000 could be realistic. Do I suggest holding out for 2,000? No, I suggest you get out of this whenever you feel the time is right for you. So we all know what needs to be done. We've all got our diamond hands. Let's drive this price point up. We're looking to finish off tomorrow at about $12. Let's even make this $11 call options. Let's make it worth it for those 10,000 contracts.